Hello, welcome everyone. This is just a quick follow-up on the Algo program. I know a lot of you were curious as to what's going to happen with that Apple trade that I gave out and shared that it was actually long the position. And yesterday, as it was dipping underneath that white line in the sand, I said, I know what's going to happen. If it closes under that white line in the sand, so to speak, it will flatten the trade. And again, it is still long, and we have a new open trade. And that's the difference between this green line right here, or green histogram, and the fuchsia. This is closed-end profits. This is an open-end profits. So when you clear out of a trade, then the two shall meet, so to speak, and as it did right here, and showing that the open trade equity concluded and it raised the bar on the closed-end profits. So Apple daily chart still long from the 173 area. Next, I wanted to go through and just kind of give an idea of what's been happening. And as we were sitting here doing that, the E-mini S&P just fired off a short, which is kind of cool because it did something unique. It gets long. It scales out of 50%. It holds and trails the balance, but then as you can see here, it exited the long and just went net short the market. So giving these trades out, and by the time you view them, I mean, a couple things can happen. It can be short, it can get out, take a tiny loss, and go long, and the market could run up forever. So it's tough to give out that trade every time we get an algo trade that fires off. But here's one of the neat things. This is the mini Dow that we've been tracking and following and sharing with you guys. The mini Dow futures trading two contracts. We just made a new equity high today. We're up to, as you can see, this is closed end, which is 6,400, but open trade equity right now is we just backed off a little bit. We were up to around $7,100. So looking at the performance and looking at the annual daily returns, not every day is a winner. We get that, right? But, overall, it's very consistent. And what this shows is that we need to work at things. So you just don't take one trade, but you got to work at this. This is a 5-minute trade. Some people like to be more engaged in the market. And again, the settings on this, while we're not going to reveal all of our proprietary work with the algo system, but I'm willing to just share it so that we all know we're on the equal playing ground, so to speak. Let me go over to format strategy real quick with you. You can see it's person algo optimizing system. It is not the new version yet, but anyway, this is the one that trades from 3:40 in the morning to 2:30 in the afternoon. And again, it only trades two contracts. So from a year-to-date perspective, and that's what that result looks like, it's showing you from January 2nd, which started on the 3rd, right? So literally from the 3rd of 2018 to today, this is the overall performance and the performance summary. So this, again, is closed-end profit. And right now, as you can see in the bottom right, it's in an active trade right now. It has not closed. We're at 69.40 currently right now as it shows you here. All right? So let's look at some other ones because I'm pretty proud of this one here. This is the crude oil, which for tracking purposes, this is not a year-to-date performance. This is a year-to-date as of January 2017 because it's an ongoing part of a portfolio. So just to share with you, this trades, again, two lots of the market, and we've just reached a new equity trading high. Two contracts in crude oil in kind of a year that, or a year and a month or so, or a year and 12 trading days, whatever it is, we haven't seen huge, massive moves in crude oil. And trading two contracts, as you probably, the most glaring thing that you would see on your screen is there was no trades in that big downdraft in the market, right? But there have been other trades that we have seen. And, the funny thing is it's trading within a kind of a trading range over here. And you can see that the equity curve is up. So crude oil doing pretty good as well. So between Apple, which I know we shared with you, and I said that this would be a situation that Apple, it would get out of this trade if we close below that white line in the sand, and it didn't. It's still long the position in Apple, and it's going to kick in with a trailing stop. So we do have a trailing stop. We also have a feature that when it hits near its pre-programmed condition of taking a profit, you will see, just like over here, it gets out of half the position and it trails a stop on the other balance. So that's that function. Here's a trade here where it took half the profit, it trailed a stop and got out at the average entry price, which is AEP, average entry price. So it helps us to maintain going with the momentum of a market. So today in our live trading room, we also put up a couple new things, such as Palo Alto Networks, which currently Palo Alto Networks generated and fired off a long position yesterday, gapped higher today, and I believe that as long as we see Palo Alto Networks maintain the structural integrity of staying above these new kind of white lines in the sand, Palo Alto Networks could see some further gains. But that's where we're at right now. Palo Alto Networks, this is a trade result that goes back since, again, the beginning of January 2017. Here's the equity curve on that. And, you know, you look at that and you go, saying it kind of zigzags. It does, but if you look at Palo Alto over the last year, it zigzagged and hasn't really gone anywhere. It's underperformed the overall market. So to look at different stocks, I think it's still a pretty decent trade, considering the fact that its closed-end trade is 43.37. And here's the one thing that it does, and you'll notice this right away. It's trading only on a $10,000 position value. So what it does is it automatically, you say, I'm only going to want to put up $10,000, and whatever the price is, get me into $10,000 worth of position. So you can alter that if you want, but that's why you see only 65 or 66 or 67, and you can see it kind of automatically calculates our position size based on the equity of $10,000. So in the last year, you know, here's Palo Alto on a $10,000 account, not trading leverage, you know, up to 4,600, so 46% return. Anyway, that was Palo Alto, and this is just something that we can also utilize this for options traders to discover, gee, if I'm long Palo Alto, and that's my stop, and that's kind of the profit target, perhaps I can sell some put spreads or look to buy some calls, because we know what, with our internal settings, what the maximum holding period is. So with that said, this is the end results of what's going on in a follow-up, and I thought it was important to share with you, because even with yesterday's move in the market and in today's kind of back and forth inactivity, and what do I mean by inactivity? Well, the S&Ps today right now, hard to see it, but they're up. They're unchanged. So that's pretty much inactivity on the S&Ps. That's what I call inactivity, unchanged on the day, but still took trades, and that's what's important. Thank you for watching, and I hope this helped you out to get a better idea of how this is more integrated for a robust trading program, or someone that maybe not want to be a day trader but can utilize these algo optimized settings for stocks, as well as maybe applying for option strategies. Thanks again.